got out of your manager's meeting for our district, and so everything's going well for our area and our region, as they like to call it. So what was the number one thing you learned today?
There's a lot of speculation on what the market's going to do, like tanking and what have you, and that's absolutely not the case as per the chief economist for CAR. We are going through a mild correction, and we're going to see a couple bumps in the road. But just, I've been doing this 30 years just like you, and we see these ups and downs. But the bottom line is California, the home prices, overall, they continue to grow.
Yeah, they call it the stairway.
The stairway to heaven.
And you'll always see it where it'll plateau, and we're in a plateau area right now. But even during the recessions, we still, and this is from our Mortgage Bankers Association, they have that there's a 3 to 5% increase even during a recession, if there was actually a recession that's oncoming, even though the word of recession has been modified now of what it actually means. Some people would say we're in one, others would say we're on the verge of one. Jackson Hole was this weekend during the week, and Powell stepped up, and he's your Federal Reserve, and he said it's going to be painful. He just flat out said we're going to have to continue to deal with this inflation, and it will be painful for the households and for the businesses. So that became something that is a challenge that's out there now. So in the mortgage-backed securities, we're getting to a threshold where we can either go left or right. And what I mean by that is rates will get back into the sixes, or they could go back towards the lower fives. It's sitting right on the border right now between the two. And we're looking at the 10-year note, and we're looking at the mortgage-backed securities right now. So it's a great time to still buy. There's good prices out there. There is a little more communication going on between buyers and sellers, which is great, instead of just getting in line with 12 other people. So if you were one of those 12 that was greatly disappointed, this is a great time to get in. Usually after August, everybody's got the kids in whatever school they want to be in, and so there's a little bit of a slowdown just because people are trying to get themselves in school and all that. We're in a predominantly retirement area, so there's a good time to come on in and buy things. Mm-hmm. It's also a great time to list. If you think you've hit a phenomenal time, Kevin's ready to list with you right now. There's anything that you need. That's one of his expertise. But what else has been going on, Kevin?
The market is really strong. It really, really is. And what's interesting that Mr. Levine said today from CAR is that the upper end, 2 million and above, for our area has pretty much peaked. And so what you'll see is you're going to see data come out that the prices are dropping. And it's not necessarily that they're dropping at the rate that they're showing through the media, like almost 8%, I think it was 7.7% is what was in the information today. But what it is these higher end $2, $3, $4, $5, $6 million homes have slowed down, pretty much dropped off compared to right after COVID, where people went crazy. So you're going to see maybe a 1 or 2% decrease, but what they're using is median price, which means the higher end's not there to compute.
Well, the other thing, and the way we look at it, is we go through a company mortgage market guide, and their analyst was talking about there's about a 15% reduction in pricing, but all they really were doing was aligning them, instead of having a price in the stars, was getting it back to some normality. Instead of just saying, well, if the neighbor sold for $400,000, I'm going to list mine for $500,000 and just see what happens. So more realistics, but it was only about a 15% actual change in pricing. And that's not across the board. That was just 15% of the units had price changes. So definitely still a great time to buy. You've got to decide if you're buying the house for today or you're buying it for long term. Long term, we've had a very successful time in real estate, especially in California, where it's continued to raise and rise year after year, even if there's been a little bit of a downturn. 08 was a stigma, but if you had actually bought at the height of 08, you would actually have an increase in value right now today. So it even surpasses the tough times.
Oh, 100%. I agree with that wholeheartedly. One of the examples they used today was the fact that a property that was at 1.2 million came down to 800,000. This is in the Los Angeles market, but today it's worth 2.2 million. So if you would have just rode that out, you would have had a lot of equity, over $1 million with equity. But and to address the price reductions in the real estate market, we have a lot of agents that have never gone through this type of market change. And I've been doing this 30 years now, so this is not my first rodeo by far. But one thing that I learned coming into the market in '92, what was happening is, as an inexperienced agent, my clients we were chasing the market on the price reductions.
Running it down.
We're running it down. And I remember one in particular, 425 Sherman Oaks, and we just kept reducing. We got down to 375, and we still hadn't caught up to the market. And he goes, "What do we do?" And I said, "Well, let's put it at 299," and then we drove it back up to 375 because of multiple offers. But the key is inexperienced agents don't understand this, and they haven't been through this. Nothing bad about them, but if you haven't had this experience, and this is one thing, this is my third go around, so we 100% have a grip on this and know how to get you the most amount of money in the shortest amount of time with the least amount of inconvenience.
And that's the other thing is carrying costs. Sometimes people they hold out for 5 or 10 grand, but then they keep it for 6 more months, and the mortgage payment alone was the 5 to 10 grand that they were trying to recoup from the sale of the property. It's like, sell it, get done with it, and let's move on to our next thing. The other thing that we find is, and this is more particular to our area, not to the whole state of California and not to the nation. We're in a micro area, and our micro selling area has some things that no one else has. One is you can't beat our weather. The weather is phenomenal, and with everybody now having the ability to work from home quite a bit more than what they have been, COVID really drove that home quickly. Would you rather be sitting in Sacramento or in the Bay Area in traffic, where you could actually be just sitting right here on the coast working from home? So we're seeing a lot of that still, where our high-tech areas and people that have those transit jobs that can be done from home, they've really come into the area, and that's driven our market up definitely in our area and stuff. So we're excited of the future. There are going to be challenges along the way. The interest rates are still going to be great. Historically, they're still all-time lows. The problem is we've heard half of what the rates are now. But again, this was the fastest crawl or run up, basically, because it wasn't really a crawl, but the fastest run up from 1996 was the fastest rates went from the 3s into the 6s all in one day. Now, they still migrate between the 5s and the 6s according to if you're paying points or if you're doing FHA or conventional. We have all those different outlets for you available. And the real thing that we would tell you is it's never too late to buy good real estate.
Is it? Yeah, exactly.
I hear somebody say that on the phone every time I call Kevin. You hear that little slogan. So I just wanted to throw that out there, so I beat him to it.
Exactly. And what's interesting is the story I like to tell people is, when we go from a 3% to 5% or 6%, and we hear a lot of pushback. Oh, that's so, this and that and blah, blah, blah. The interesting thing is when I got out of the military in 91, I bought a duplex. And I was ecstatic at getting a 9.25% interest rate. Everybody else I knew that was buying was double digit, 10% and above. We did a VA, no money down on a duplex. And I got lucky. It was great. And so when I hear, 6% is too high, 5.5% too high. If you look at the median, we realistically, for the economy to work properly, and correct me if I'm wrong, it should be around 7 or 8% for,
We started having really buying about 7% is where it really starts affecting the buying process. Yeah. However, every time it goes up a quarter of rate, you lose about $10,000 worth of buying power. So the timing to get in is much more critical than what you think, because you go, I'm going to wait for this, I'm going to wait for that. You can wait every day of the week and still be a renter next month and next year and 2 years from now. And you might have missed out on that opportunity of equity, because equity is built off the whole value of the home, not just the amount you're putting down. So an example I use is if I put $10,000 down on a house that's a total of $100,000 and it goes up 3%, I made $3,000. If I keep the $10,000, I only made $300 at the same 3%. I sort of like making the $3,000 versus the joy of $300.
Well, the interesting thing about real estate, California real estate has always been a long-term investment. One thing that I've preached my whole career is that if you stayed in it 10 years, we've always been able to get you out of it at a break even. You had your tax to be able to go back on. 20 years, you've always made a substantial amount of business. But where some people get it wrong is they're like, well, I didn't make any money in a year or two. But there has been some times, the loan that you did for me, it's been about 4 years now. The market in Arroyo Grande on that property that we purchased has gone up 63% in 4 years. That's a lot. That's more than average. That's much more than normal. But there are times that you can take advantage of those type of things. But if you, an interesting thing is buying power, which you were talking about just a minute ago. In the slides today, it was also talking about if you were to buy at a 3%, 1,000,001 versus, and I hope I'm getting this correct, but versus 6% was the difference of 1,000,001 or 824. So the key is at 824, it's the same amount of money you're spending, but for less because interest rate went up.
Correct.
So hopefully I'm explaining that. So
Your monthly payment basically is the same for less buying power.
Correct, 100%.
That's the short answer that we use. And the other piece is there's always time for you to be successful. We're here to help you do that. If you have any questions, give Kevin or I a call, and we're ready to be there for you at a drop of a hat. Thanks again.
And Sean, how do they get hold of you?
I'm 805-489-1257 or SURELOAN at AOL.com, SureLoan@AOL.com. And Kevin?
Kevin Jones, Realty Professionals, 805-473-0300. Again, 473-0300 or listwithme@gmail.com.
And have a great day.
Remember, it's never too late to buy great real estate.